Welcome to the deep dive. Today, we're taking a closer look at Hatsun Agro Product Limited. They're a huge player in the dairy sector.
Absolutely. Chances are you've got some of their stuff in your fridge right now.
Exactly. And we're not just crunching the numbers from their latest quarter. We really want to get into the strategic thinking, the leadership changes, the overall health of the company.
Right. What's really going on behind the scenes?
Our main source today is their board meeting outcome document. It's from July 18th, 2025, and it covers their unaudited Q1 FY26 results and some other pretty big decisions.
Yeah. And our mission here is basically to pull out the key insights, those aha moments, so you can get up to speed quickly on where Hatsun Agro is at and where it might be heading.
Okay, so let's get into it. The board met on July 18th, lasted about an hour and 15 minutes from 3:30 to 4:45 p.m., and they covered a fair bit.
They definitely did. First up, something shareholders always listen for.
Ah, yes, the dividend.
Exactly. They declared an interim dividend. The board approved Rs 6.00 per share.
6 rupees on a face value of 1 rupee.
Yeah. So that's a 600% dividend on the fully paid up equity shares. It's quite something.
Wow. Okay. That's a strong signal.
It really is. Shows confidence, strong cash flow.
And this is the first interim dividend for the 2025-26 financial year. So for shareholders listening, the record date you need to know is July 24th, 2025.
Right. And the payout will happen on or before August 16th, 2025.
Got it. Okay, so beyond the dividend, what else came out of the boardroom? Leadership seems key here.
Very much so. They approved 2 important reappointments. Looks like they're aiming for continuity.
Okay, who are we talking about?
Well, first, Mr. C. Sathian. He's been reappointed as Executive Vice Chairman. He's serving in the capacity of Executive Director.
Right. And for how long?
It's a 5-year term,
Wow.
starting October 19th, 2025, running through to October 18th, 2030. But this needs shareholder approval at the AGM, of course.
Of course. Now, Mr. Sathian, he's got quite a background, doesn't he?
He does. He's actually the son of the chairman, Mr. R.G. Chandramogan.
Ah,
And he's got, like, over 20 years in the dairy industry. Been really central to their growth strategy, kind of the link between the board and management.
yeah, I saw he even received an honorary Doctor of Letters. Pretty interesting.
Yeah, from the International Tamil University, USA. So definitely an influential figure.
Okay, and who was the second reappointment?
That was Mr. K.S. Thanarajan. He's been reappointed as a non-executive, non-independent director, again, subject to shareholder approval.
Right, and his expertise.
Economics background, master's degree, and like Mr. Sathian, over 20 years in the dairy business, specifically handling day-to-day operations for the dairy division in the past.
Okay, and important point, he's not related to any other directors.
Correct. Adds a bit of, independence there, even though he's non-executive, non-independent technically.
Makes sense. Okay, and for shareholders wanting to vote on these reappointments, the AGM details.
Right. The 40th AGM is set for Thursday, August 28th, 2025.
And it's virtual again.
Yep, via video conferencing or other audiovisual means, as they put it.
Okay, and the cutoff date for eligibility to vote.
That's August 21st, 2025. If you're a shareholder on that date, you get to vote.
Good to know. All right, moving beyond leadership and dividends, the board also made some interesting decisions about investments and future plans.
Yeah, definitely. One that stood out was an investment related to solar energy.
Oh, tell me more.
They approved putting money into FPEL Daylight Private Limited,
Yeah.
either investing in equity or acquiring shares.
Okay, FPEL Daylight. And the purpose.
It's about solar power consumption, specifically for Hatsun's plant in Tamil Nadu, using something called a group captive consumption facility.
Group captive consumption. Okay, what does that mean in simple terms?
Basically, it lets Hatsun sort of generate its own solar power via this investment. It often means cheaper, more predictable energy costs compared to just buying from the grid.
Okay. So cost savings and maybe some green credentials too. Makes sense for a big dairy operation.
Exactly. Energy is a big cost. And this FPEL Daylight, they're focused on renewables, started in Feb 2022. Their turnover jumped quite a bit recently, too.
How much is Hatsun investing?
The total equity investment is pegged at Rs 9.8 crores, and their stake will be less than 20%.
Okay, less than 20%. And importantly, not a related party deal.
Correct. Not a related party transaction.
All right. What other investments were decided?
Well, this one's a bit different. They approved the purchase of residential properties
Residential properties.
for providing accommodation to the directors of the company.
Okay. How much are we talking about?
The deal is with Raj Waterscape Properties Private Limited. The cost is Rs 19.25 crores.
19.25 crores.
Yeah, and that's before stamp duty, registration fees, all those extra costs.
Right. For how many properties?
2 residential properties. And again, they state this is not a related party transaction.
Okay. 19 crores for director accommodation. That's certainly a decision.
It is. It's a significant chunk of capital.
All right, so we've got dividends, leadership continuity, strategic energy investments, and this property purchase. Quite a mix. How did all this translate into actual financial performance for Q1? Let's get into the numbers.
Sounds good. So they released both standalone and consolidated results for the quarter ending June 30, 2025.
And the auditors. All clear.
Yep, the audit committee reviewed them, board approved them, and the statutory auditors gave an unmodified review conclusion. Basically the thumbs up.
Okay, good. Let's start with the standalone figures then, just Hatsun Agro itself.
Right. So their main business is milk and milk products. Single segment, really. Revenue from operations for Q1 FY26 was our heirs, 2,534.91 crores.
Okay, 2,535 crores roughly. How does that compare?
It's up nicely. It was Rs 2,375 crores in Q1 of last year and Rs 2,210 crores in the previous quarter, Q4 FY25.
So good growth there.
Decent top-line growth, and the bottom line, profit after tax.
Payday for Q1 FY26 came in at Rs 148.08 crores.
148 crores, also showing growth. Definitely. That's up from Rs 130.54 crores in Q1 last year, and a really big jump from the Rs 49.64 crores they posted in Q4 FY25.
Wow, quite a rebound from Q4. And the earnings per share?
Basic EPS reflects that. It's Rs 6.65 for this quarter. Compare that to Rs 5.86 a year ago and just Rs 2.23 in Q4.
Okay, so the standalone picture looks pretty solid. Strong quarter.
Yeah, seems that way.
Now let's look at the consolidated results. This includes the subsidiary, right? And you mentioned the nuance.
Yes, a very important one.
Yeah.
So consolidated revenue from operations for Q1 FY26 was Rs 2,590.28 crores.
Okay, slightly higher than standalone, up from Q4.
Yes, Q4 consolidated was Rs 2,242.85 crores.
And consolidated profit after tax.
And the consolidated basic EPS follows suit, Rs 6.07 for Q1 FY26 versus Rs 1.93 for Q4 FY25.
Okay, so big jumps quarter on quarter on the consolidated side too. What's this critical nuance you mentioned? How should we interpret this year on year?
Right, here's the key thing you absolutely have to remember. You cannot directly compare the Q1 FY26 consolidated results with Q1 FY25 consolidated results. They aren't comparable.
Not comparable? Why not?
Because of Milk Mantra Dairy Private Limited, or MMDPL, Hatsun acquired them fully back in January 2025.
Ah, right. For about 233 crores.
Exactly. So MMDPL became a wholly owned subsidiary from January 27th, 2025.
Okay.
So the Q1 results from last year, FY25, were basically just Hatsun standalone. But the Q4 FY25 and now these Q1 FY26 consolidated results include MMDPL's numbers.
Got it. So comparing this Q1's consolidated profit to last Q1's consolidated profit is misleading because last year didn't include Milk Mantra.
Precisely. You're comparing results from a different corporate structure. Apples and slightly larger, different apples maybe. The point is the base is different.
Okay. And the merger itself, the formal amalgamation of MMDPL into Hatsun.
That's still in the works. It's pending approval from the NCLT, the National Company Law Tribunal.
Right, the body that handles these corporate merger approvals. Okay, that's a really crucial piece of context for anyone looking at these numbers.
Absolutely vital. Otherwise, the year-on-year consolidated growth looks artificially inflated.
Okay, so wrapping things up. We've seen Hatsun Agro post strong standalone numbers in Q1 FY26.
Yep, solid performance on their core business.
We've seen strategic moves, locking in leadership, paying a hefty dividend, investing in solar for efficiency.
And also that residential property purchase.
Right, and the consolidated picture is positive quarter on quarter, but with that big asterisk about year-on-year comparisons due to the Milk Mantra acquisition.
Exactly. The acquisition is reshaping their consolidated profile, and we need to keep that front of mind.
So looking ahead, the company seems focused on both immediate shareholder value and longer-term operational plays like the solar investment.
Yeah, balancing immediate returns with future efficiency and stability, and keeping experienced leadership in place.
The consolidated numbers story is really just beginning to unfold post-acquisition.
It really is. The full impact and synergies will take time to play out.
Which brings us to a final thought for you, the listener. How do you think this mix of strategies, the internal focus on energy efficiency, the leadership stability, the growing scale through acquisition, How might all that shape Hatzeneggro's position in the really competitive dairy market over the next few years?
Yeah. What's the combined effect of these different threads? Is it setting them up for stronger market share, better margins, or are there risks in juggling these different priorities?
Definitely something to think about as you keep following the story. Thanks for joining us on this deep dive.